Hello guys, welcome to ekakojostudios. And then once again, you are welcome to the updated version of the candlestick anatomy, or what I call the anatomy of the candlestick. Before we delve into it, there are a few things I want you to know. Now, this channel is all about the financial market. Anything you want to know about Forex, anything you want to know about crypto, and then the stock market is just here, all right? And I give educations about all these financial market. All right, so if you want to delve into any of these areas, guys, this is the right channel for you. And before we go on, I want you to if you're a new member, if it's your first time on this channel, kindly do well to subscribe. Yes, because it's only the subscription, and by you clicking on the notification bell icon, that you can get all updates, or you can get all the contents I share here. And then also don't forget to like this video. Yes, don't forget to like. It doesn't cost any amount to like this video. Just like to support me, and then make sure you share to someone that needs it, because there are other people who are seeking information or are seeking knowledge just like you are doing. And then leave all your comments also in the comment section. Yeah, I will attend to it as swift as possible. Now, guys, if you want to join any of my education platform or any of my social media, at the links are in the description. The links are in the description. You can follow me on all the social media channels for the best of knowledge and the education on financial market. This is the right place for you. And guys, once again, I want to let you know that I use only two brokers for now. I use only two brokers, and I recommend two brokers to you. That is Exness and Deriv. Yes, Exness and Deriv. I've already explained why I use Exness, and I already explained why I use Deriv, because Deriv give me access to different varieties of products, the synthetics market and then the currency market, together with other financial markets, all forms of financial market that I use. These are the reason why I like using Deriv. All right. Yeah, so if you are wondering on which broker to use, I have the link in the description. Do well to sign up with Deriv or sign up with Exness. Just get a link within the description, and then you are good to go. All right, so like I said, this is the updated version of the candlestick anatomy. And in this episode, I'm going to take you through a detailed explanation to the candlestick anatomy. Now, I've always been saying that the candlestick is the language of the financial market, is the language of the financial market, is the language of the crypto market, the language of the stock market. Now you can treat all these markets with this knowledge. First of all, okay, before you get to know any other thing, you need to know the language that is spoken in the financial market, and that is the candlestick. Okay, so if you don't know how to analyze the market using these candlesticks, and then it means it's going to be like you are on a foreign land where you do not understand the language that is spoken. All right, so I'm going to give you the basics, I'm going to give you the anatomy, and from there you are going to get the foundation and the platform to build on your knowledge. All right, if you already have the knowledge, it's going to expand your knowledge that you have around candlesticks, because it is this language that we use in trading the market, and it is this language that you get to speak with other traders. Therefore, it is very paramount that you get to understand the candlestick anatomy. All right, so this will be the updated version of the previous one I did, which is right here on this channel. Okay, so let's delve right into it. So what you are seeing on the screen are the what we call the bullish candle and the bearish candle. All right, so in every market, even in your local market, there are two groups of people. We have those who are in the market to buy and those that are in the market to sell. The same way when it comes to the financial market, the crypto, forex, and the stock market. Okay, we have those that are selling and those that are buying. All right, in each case, we have some common terms that we use, and these you must actually familiarize yourself with these terms. All right, so we use the word bullish, okay, what you see here is a bullish candle. Now we use a bullish candle to represent buyers. All right, we use a bullish candle to represent buyers, and we use a bearish candle to represent what? Sellers in the market. All right, so someone might say that I am bullish on this asset, I am bullish on this market, meaning that the person is what? Buying. The person is actually buying. If someone says I am bearish on this market, means the person is actually selling. Okay, and oftentimes you'll be hearing this word, bulls and bears. We use the word bulls to represent what? Buyers. We use the word bears to represent what? Sellers. Okay, or someone can equally say I'm going bullish on gold, I'm going bullish on GBP USD, I'm going bullish on BTC. Okay, when the person says I'm going bullish, means he's going to buy. If someone says I'm going bearish on this asset or on this asset, it means that the person is going to sell. So these are keywords that you must familiarize yourself with if you really want to be a financial market analyst. All right. So let's delve into it. Let's look at the anatomy of the candlestick. Okay, we are going to start with a bullish candle first. All right. So with a bullish candle, we have the opening price. We have the opening price. So this is the opening price. All right. And when it comes to bullish candle, it means that um, it is used to represent buyers, and because we use in representing buyers, it means that price is actually going to go up. Okay, so the bullish candle has an opening price. It has the lowest price will go within a specific time. Okay, within a specific time, it has the lowest price will go, and then it has the highest price will get to, and then it will have the closing price. I'm going to take it one more time. The bullish candle has an opening price. It has the lowest price, or the lowest price will go. It has the highest price will go within that time frame, and it will have the closing price. And this actually also refers to the body of the candle. This refers to the body of the candle. And because the bullish candle used to represent buyers, always we are looking at price closing above the opening price. Price always closes above the opening price. That is why we have the opening price down here, and because price will be going up, we should have the closing price higher than the opening price. Now with this understanding, let's move on to the bearish candle. Now I said the bearish candle is used to represent sellers. All right, so the bearish candle also has an opening price. It has the highest price will go, it has the lowest price will go, and then it will have the closing price. The highest price will go, the lowest price will go within a certain time frame, and then the closing price. And then we have this to be the body of the candle. Okay, the body of the candle. Now notice this, because the bearish candle is used to represent sellers. Now when there are more sellers in the market, we know that price decreases. Okay, so with the bearish candle, always the price closes below the opening price, meaning that the price opens at a higher level, or it opens at a higher price and it closes at a lower price, because there are more sellers selling. Okay, there are more sellers selling, therefore price will be going down. Okay, so that is the key the key thing about the bearish candle. Okay, so we want to look at almost all the parts of the bullish candle and the bearish candles are the same, but there is one key difference between the bullish candle and the bearish candle. Now, because the bullish candle always price always go up, the bullish candle always closes at a higher price, whilst the bearish candle always closes at a lower price. So with the bullish candle, we have the closing price above the opening price, And then with the bearish candle, we have the closing price below the opening price, which I said price opens high and closes low. So the opening price and the closing price of these two candles, which is the bullish candle and the bearish candle, are the two main differences. So when you open any chart, if it's a bullish candle, you should be able to know the opening price and the closing price. If it's a bearish candle, you should be able to know the opening price and the closing price. Okay, so these are the parts of the candlestick anatomy, or this is the anatomy of the candlestick. You should know this part. When you open your chart, okay, when you open your forex chart, your crypto chart, or your stock chart, you should be able to depending on the time frame you select, you should be able to identify the opening price, the closing price, the highest price will go, the lowest price went within that specific time frame. You should be able to know these I'm talking about. All right, so that is it for the bullish candle and then the bearish candle. Now we want to go back to guys, give me a second. We want to go back to I want to take you okay, good. I want to take you through to the charts. I want to take you to the charts, and then I'm going to select different time frames, and then we look at what we just learned. All right. So this episode is about the anatomy of the candlesticks with different time frames. Okay. So I'm actually combining two things. We have the anatomy of the candlesticks, and then we have time frames. Okay, time frame analysis. So once we are done with the anatomy of the candlestick, let's look at the time frame analysis. So I've always been saying that when you open your charts, when you see the chart like this, for instance, if you are a newbie, or if you are just been introduced to the financial market or the forex market, the candlestick, I said, is the language of the market. Okay, and you realize that there are green candles and there are red candles. Guys, let me talk about this. So you realize that we had bullish candles and bearish candles. Let me go over it once again. We had bullish candles and bearish candles. Now take note, the green and the red are just color codes. It's a general color code that we use in representing buyers and sellers. So if you open the chart and you see green candles and red candles, the green candles represent buyers and the red candle represents sellers. But this is not a rule. This is not a rule, or this is not a law. Someone can choose to represent the bullish candle with a black candle and use a yellow color to represent the bearish candle. But what you must take note is the opening price and the closing price. Okay, the opening price and the closing price, that is actually going to tell you whether the candle is a bullish candle or a bearish candle. So like I said, we oftentimes use the green candles and then the red candles. Yes, that is what is widely used. So if you come across it, this represents buyers and this represents sellers, but it is not a rule. There are other charts that you are going to see in which you are going to see different colors representing buyers and sellers. Okay, so that is just a quick one there. Let's go to the time frame analysis. Let's go through the time frame analysis. All right, so let's see for ourselves. With the time frame analysis, we have from 1 minute to 24 hours. Now, when you are using the MT5, you can actually have up to a monthly time frame, but on the website you are going to see up to 24 hours time frame. Okay, so you are actually going to see from 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15, 30, 1 hour, 2 hours, 4 hours, 8 hours. You can even get 12 hours. You can select every time frame that you want. Okay, so the time frame will actually tell you what is happening in the market, whether the buyers have taken control over the market or the sellers have taken control over the market. So guys, let's start from 1 minute. I want us to analyze it this way. So when we go to the 1 minute chart, all that it means is that every candle you see on the screen represents 1 minute. Every candle, each candle you are seeing on this screen represents what? 1 minute. All right, it represents what? 1 minute. So for instance, you see this candle, this long bearish candle. This candle has an opening price. It has the highest it went and it has the lowest. Okay, so that is what we actually want to see. So for this long bearish candle, this is the opening price. It opened at a higher price, and then price went up a little, went a little higher than the opening price, and then the sellers pushed the price all the way down here, and price closed at this point. So for this particular candle, it has the opening price, it has the highest price went, then it has the lowest price came, and then it has the closing price. All right, the same applies to this bullish candle. Price opened at the bottom, it opened at a lower price. Okay, it opened at a lower price, then price went down a little. Okay, price went down a little, and then it went all the way up to this high, and then it dropped a little, and then price closed at this point. So all that we are trying to do is to be able to identify the opening prices, okay, the closing prices, the highest price went and the lowest price went. That is what we want to relate it with what we learn on the candlestick anatomy. So you can look at each of these candles and identify the opening price, the closing price, the highest price went and the lowest price went. That is for the 1 minute time frame. The same applies to all the time frames. For instance, let's look at 1 hour time frame. Okay, when you switch to 1 hour time frame, it means that every candle you see represents 1 hour. Each candle you see on the screen is representing what? 1 hour. So within that 1 hour, it is actually going to show you what happened within the market, whether the buyers took control over the market or the sellers took control over the market. All right, so let's look at some examples here. Let's look at this particular candle. All right, so with this bullish candle you are seeing here, this 1 hour bullish candle you are seeing here, price opened at the bottom here. Okay, price opened at the bottom here. It went down a little, then the bulls set in, more buyers set in, and they pushed the price all the way to this high. Okay, they pushed the price all the way to this high, and then the sellers were able to push the price down a little, and then price closed here at this point. And whenever price closes, the next candle starts to open at that level. So if price closes here, the next candle opens here. All right, and then you realize that the next candle that opened is a bullish candle. All right, and then it also went up, price went up because the bulls were still in control of the market. So all that we are trying to do is to be able to identify the opening price, closing price, highest price went, and the lowest price went. Now we can also switch to 24 hours. Now when we switch to 24 hours, it means that every candlestick you see represents 24 hours. Each of the candle represents 24 hours. Okay, now within these 24 hours too, we have the opening price, the lowest price went, highest price went, and then the closing price. So let's look at examples. Okay, so let's look at this candle for instance. So with this bullish candle you are seeing, okay, now always we know the bullish candle opens at a lower price and then closes at a higher price, and then we'll have the highest price went and then the lowest price went. Then we know where the candle closes. Okay, where the candle closes, that is where the next candle opens. So this bullish candle closed at this level. Okay, it closed at this level, price closed at this level, and then the next candle that formed, this is going to be the opening price. Okay, the opening price. So the price opened here, it went up a little, then the sellers pushed the price all the way down here, it came up a little more, and then it closed at this point. Okay, and then what you must take notice that I've already said that, but I want to repeat it. Where one candle closes is where another candle opens. So for this bearish candle, it closed below here, it closed at this level, and then the next candle that formed has its opening price here. Okay, it has its opening price here. It went down a little, then went all the way up. Then the price was pushed down a little, and it has a closing price. Then you realize the next candle also opens at the level at which it closed. So that is how what occurs in the market. So for every specific time frame, each specific time frame has its opening price. The highest price will go, the lowest price will go, and then the closing price. That is what I want you to understand, because these are the foundation of your knowledge in technical analysis, guys. So I'm done with the time frame. You can select every time frame you want, whether being it 24 hours, 8 hours, 4 hours, 1 minute, 5 minutes. It depends on you. Each of these time frame has its opening price, closing price, highest, and then the lowest price got to. So that is what we want to learn about multiple time frames analysis. Okay, multiple time frames. That is being able to identify the opening price, the closing prices, the highest and the lowest prices. Okay, for each of the candles. That's the bearish candle and then the bullish candle. Guys, so let's go back to our final wrap up. Let's get to our final wrap up. So I said this is an updated version of the candlestick anatomy. So pardon me for taking much of your time, but I hope this is really going to help you, it's going to benefit you. All right. Yes. So guys, we have come to the end of the candlestick anatomy and then time frames, being able to identify the open, the high, the low, and the close for every time frame. You should be able to identify these parts, and that is actually going to inform you what to do in the market. All right. So in the next episode, don't forget that this is the beginning of a series of episodes. All right. So our next episode is going to be on candlestick patterns. We are going to look at various candlesticks. We know that candlesticks have different body shapes and sizes, different body shapes and sizes. So we are going to look at their names and then the psychology behind the formation of these candlesticks. And it's actually going to give us understanding of what is going to happen next when those shape and sizes forms in the market. All right, so that's what we are going to look next. Now, don't forget to subscribe if you are new on the channel, so that you are going to get updated on all the other episodes that are going to come up. Guys, thank you so much. If there is anything you want to know or there's anything you want to talk about, put your comment in the comment section, and then I'll definitely answer as fast as possible. See you in my next episode. Don't forget to like once again. Don't forget to like. Don't forget to share as well. And don't forget to comment. Thank you so much for your time. Let's meet in the next episode.